Hi guys, good morning. Wednesday 15th of August, just gone past 8:30 in the morning. So we'll have a quick run over of what went on yesterday and what could happen today. We've got a bit of data coming out this morning and then into the afternoon as well. Well, actually, better place to start, I guess, is the dollar lira. You can see here regained 6 to the downside here, only just to retrace half of that move, but that's really been the theme, I would say, of the last sort of few hours or so, is just the calm coming back into the markets, and definitely in case of the lira as well. A bit of risk off coming back as well towards the back end of yesterday's session, which we'll also have a look at, where equity markets started just to regain some of their losses that they perhaps had sort of materialised from Thursday onwards. But yep, keep an eye, I would say, this morning or in general, just on the dollar lira. If we do get a sharp push higher at all, then that might be the catalyst for seeing extra weakness in the euro and pound against the dollar, which we'll have a look at as well, which of course have continued to push lower. But if this market continues to perhaps repair some of the losses over the last few days, you might then start to see a bit of profit taking coming into these dollar pairs, and even gold as well, which of course is on a big decline. If we have a look over at how we traded yesterday, a couple of half decent opportunities in what was relatively choppy early trading for the euro. You can see here, once we sort of had a break of the low of the day in the pivot for the sort of the fourth time, you can see then we got that push through. Found a bit of support initially just before the S1 to then come back, and at this sort of time the dollar was strengthening all over the place, and then we made a new low for the year. Mentioned with the dollar lira just recovering slightly more this morning than in the previous days. We've had a bit of retracement here in the euro, so definitely worth keeping an eye on that. In terms of areas today where the euro looks likely or if it was to go there, to sort of find a bit of resistance, I think the pivot marks up quite nicely with the low of Monday that we did break through, so that would be an area to keep an eye on. Alternatively, it might be safer just to see if you are looking for this continuation, a break of this downward trend that we are on, and also the S1 and low of the day, rather than if it was to become up quite quickly. I think the pivot could be okay. Other than that, it's then starting to get into a bit of the mess that had been occurring Monday and Tuesday before we did get that further breakthrough. So pivot, I think, depending on how we get up there, or a break of the low of the day, is definitely an area I would be considering going forward. Similar opportunity in the pound when we had a breakthrough of the pivot and the low, and this trend line that you see going on, and similar as well to the euro, and just starting to see a bit of a retracement with the dollar index still obviously nicely above 95, positive for the day still, but just coming under a bit of pressure. In terms of where we could find a bit of resistance, looking at the pound on Monday's low, literally where we're trading now, it will be worthwhile to to see how we react. We were here, and I'll put this onto a 5-minute chart. About 10 minutes ago we had a little bit of a bounce, only to then sort of find support along this trend that we are following over the last hour or so. As well, pivot in the mix for an area that I would be looking to consider as a resistance point. But with the dollar just weakening a touch, it might be worth just having your dollar lira chart up, just a bit of an indication of where this market or these dollar markets could go. Aussie dollar continued as well the sort of trend that it's been on, really hurt last few weeks or so, coming under pressure, breaking the low, decent opportunity at the same sort of time that we had the push down in both the euro and pound as well. In terms of this market, to look for an area to go short, to continue it, I like the idea of going short around the pivot. You've got a bit of a trend that matches up there, the low of yesterday's morning, and I feel if we were to push on, it would be a nice place for anyone looking for along here to be taking profit as well. Final sort of dollar pair to have a look at with the sort of risk off coming back into the market. You can see, well, when obviously it was all kicking off, if you like, the yen strengthening, and then last sort of couple of days, fears of all-out war, if you like, have just chilled down a bit. We've had a break as well, technically, which has sort of added to the mix, but the dollar, with that strength that we've seen in the last couple of days, helping pushing this market higher, as the yen has sort of weakened on sort of money going back into equity markets. You can see yesterday afternoon, following the cash open, up to a really key level. And I talked about this yesterday in the afternoon when we were sort of having a look over the markets, and it was a key area where, for me, I'm just sort of waiting to see if we can get a break above that. Then I think it would be a relatively quick move until we get to the highs that we had of the last week. I feel if we break it to the downside, so just below today's S2 and the low of Monday that you can see here, then the next area that I would be really interested in, and perhaps one of the most interesting levels on these charts at the moment, 2790 on the S&P. Quite a lot of support found there from previous days and weeks, and mentioned yesterday, probably likely to have quite a few stops placed around here. So in terms of this market, whether we can get another push higher to perhaps test all-time highs, I would only really be looking to get in on that if we can get a confirmed break above this range that we've been in for the last sort of 2.5 days. But sentiment certainly better than it was a couple of days ago, so I would suggest to favour the upside, but of course only really trading what you see. Overnight we had the oil data as well, so you can see here from the rectangle marked up there at 9:30 for oil and gasoline that it would have been negatively received. So if we have a quick look over at those figures as they came out, let me just transition the chart there, so you can see an unexpected build of just over 3.5 million was really the lead driver in this this oil move lower that you've seen, and it's sustained today. And I'd be keeping an eye literally where we're trading now, 66.59, but just below 51 yesterday evening sort of lower point, and this morning we found a bit of support. And just looking at the previous sort of couple of days, when we do break lower in oil, it really does go. So I'll be keeping an eye on that. But yeah, going back to the API figures, you also had a build there for Cushing, over 1.5 million more than expected. But the API with a drawdown expected 2.5, the big sort of swing there of 5 and a bit million really leading the way. Of course, that's coming out today at 3:30 as usual, in its usual slot. But we also had the data, as mentioned, coming out at 9:30, the UK, the inflation numbers, core CPI and CPI, both the month-on-month and year-on-year figures to come in. You can see the expected for the year-on-year at 2.5 for the inflation, and core coming in at 1.9. Sorry. So here you got the recent sort of trend of numbers that have come out over the last 12 months. You can see it's been quite steady around 2.4. The lowest, so with 2.5 expected, would sort of bring us back into really the average of the last sort of 4 or 5 months. I think in terms of looking for a real reaction from this, it'd be interesting if we could get lower than the sort of the 2.4, which has been the low of the sort of 18 months. If we can get anywhere back down to sort of just below 2.2%, then I think we'll see quite a bit of weakness come into the market. For the core, gone are the days of up near 3%, back now below 1.9 again expected. That's the lowest it had been for 12 months, and again lower than that, maybe sort of 1.8, lowest we would have for a year and a half. I'd expect to see continued weakness come into the pound. In terms of opportunities for the pound, just going to transition the chart over. I'd be looking for a key sort of pre 10 minutes to 9:30 to see if there has been a leak whether it could be better or worse into the market, and then sort of that might change my view on how to trade it if there is an opportunity. I feel if we were to have a continued weak number, so below that sort of 1.8 for the core, or 2.22% for the inflation number, then I think we'd get down to the low very quickly. Euro pound as well, I think we'd go on to make a high, and R1, yesterday's high, would look to come into play. However, definitely worth keeping an eye on what happens in the next sort of half hour for the pound, as notoriously it can sort of give away an indication whether it's better or worse. We had the numbers out yesterday, which, as you can see here from 9:30, were a bit worse than expected, and that helped push this market low to then break the pivot as well. So that coming out at 9:30 as well. Into the second half of the day, retail sales at 1:30 out of the US, expected month on month to come in at 0.1. Relatively volatile release, as we know. What would 0.1 really mean? Not too much. I think you'd really want to be seeing a pretty big break either way to get a full-on move here. The high of the year, 1.9, or a negative number, I think would be probably the most interesting one we haven't seen for once we've only seen that in the sort of the last 12 months. And then of course coming on, you've got 330 DOE numbers to come out as well. And speaking of oil, you're just starting to see a bit of a break lower here. Of course, volume is going to be slightly affected compared to the afternoon, a bit lower, but you can just start to see coming under a bit of pressure here. Worth having a look at gasoline as well, which on that low created last night is also having a break here as well. So remains to be seen if we can get a confirmed break. For now, just had a little 10 tick pop, bit of resistance likely to be found around these previous lows of the day and yesterday evening for oil. So worth having a look there to see if we can continue this push down. $66 marks up quite nicely with the S1. It might well be that the DOE has to come to save the day for oil, which has been on a bit of a messy ride as of late. We had obviously this move, as you can see, from the 8th, big push down, bit of a recovery, and it's even on the Monday when you had the recovery of that big push lower we had late afternoon into the evening. It does feel like there's a lot more sellers in this market for now. I think if I just bring this up on a longer dated chart, I mentioned a couple of times of I see us getting just to the low 60s. I think obviously key support literally around these sort of lows, around 66, but I feel we can sort of drift lower down to 63, and that might be the area where we do find a bit more support for this push up. Remains to be seen what happens on these lows, but definitely worth keeping an eye on that for any oil traders as well. Nasdaq is starting to get squeezed in. I mentioned obviously the markets just sort of easing off the Turkish sort of crisis, and that might well now lead to equities looking to push higher again. However, much with S&P, with the resistance sort of zone that we're in, I'd only really be looking to take this on if we can get a break above this sort of trend from the recent highs and the high of the day. I feel that could be a decent opportunity later on, and obviously targeting the high that we had on the 13th, the high of the week, and then we could get a further push as well. In terms of the pivot, obviously we found a bit of support there this morning. If we were to come back down, it wouldn't really interest me. I feel if we were to get another test, it'd be perhaps more likely to see the level break, and then I wouldn't necessarily be wanting to look to go short at the moment. The Dow Jones, similar to the Nasdaq in that I'd only really be interested on a break above this lower trend coming down, and then the highs of the day can be sort of targeted of yesterday, and then up to the R1, a key resistance level. So remains to be seen where these markets close the week, but it does feel like we are going to get another sort of push higher although technically it might well be that could change my mind if these lower levels break as well. Having a look over at T-Notes, a bit of a quieter day yesterday in comparison to the move that we saw late last week, and we're starting to, just see an unwind of this move. In terms of technically where it would be interesting, you can see we've had good support, or had good support I should say, on the 19th, only for that level to then act as resistance before breaking through late last week on the sort of the fundamental side of things. So if we come back down here, 119.27, I'll be looking for an area of support. Obviously we've had this sort of brief rally when the market's still heavily down for the year. You can see, let's bring that into play, still not too far off those lows that we've had. Gold, just to wrap things up, really key level that had broken here on the futures. Really nice support on previous days. Came in Monday, then you had that push down, couple of opportunities to sort of rejoin the recent trend that there's been. With the dollar still relatively strong, I'd be favouring the downside, but it might just be worth preferring it from a bit higher up. A couple of times yesterday, you can see there was a decent opportunity to get short this market. Much was the same with the pound and euro in the break of that sort of trend from these lows, and also you had a bit of a chance late last night on the pullback of that area. Pivot looks quite good. We obviously broken to the downside, the 1200 level on the futures. I know the spot did that a few days ago. I think pivot would be an obvious place to look to get in. The lows are yesterday around S1. We had a bit of initial support there early this morning. That would be a point in the market that I'd also be looking at, but it would be a case of just sort of paying attention to the like I mentioned earlier, the dollar lira, just to get an indication if that could continue, or we might start to see a bit of a retracement to the downside, and the lira starts strengthening, and these dollar shorts or that you see on the charts in the euro and the pound and gold and Aussie dollar start to unwind as well. So got about 40 minutes until the data that comes out, so be structuring the morning really around that, and in terms of waiting to see if that can offer any opportunity. Be focusing on the dollar side of things, and preferring a bit of a retracement or a break of the lows as well. Going into the sort of afternoon, structuring it around the retail sales data, 1:30. Got a bit of lower tier data coming out as well, the US with the industrial production capacity utilization, manufacturing output as well, coming out at 3 o'clock. Not expecting too much of a move, and then waiting for oil at 3:30 as well, to sort of drive the markets into the rest of the day. Equities, as mentioned, would prefer to see these sort of break out of their zones and their ranges that they're in. It might well be that cash open is the sort of the main driver for those markets to kick on in volume. Oil still continuing just to trickle below that low. We're finding now resistance, as mentioned, on the previous level that was a support. Any questions? As usual, please do get them in the chat. I'll be sat on this desk for the morning, so we'll cover the retail sales, not the retail sales, the inflation numbers as they come out at 9:30 as well. Hope you all have a good day, and I'll catch you in the chat.